everyone's freaking out, the market's crashing. I would say the stats will show otherwise, but a little more opportunity for sure on the buy side, and a little bit of calmness for sellers these days, which I don't think is necessarily a bad thing. 75% of Canadians agreed that their home has become more important to them due to the pandemic. An additional 65% saying they feel a stronger emotional connection to it. So it's kind of changing the way people are buying houses and why they're buying them. And especially among renters, which is interesting. Anytime I post a lease listing, it's like inundated with applications, regardless of what type of house it is, what type of, if it's an apartment versus a house. So it seems to be massive need for rentals as well. The decrease in number of sales from 2021 to 2022 was 22%. And then up 32.1%. Again, this has been the story for many months. The decrease in average days on market, and then the decrease in number of listings. So you can see kind of the difference between number of sales and number of listings there. And then the month over month, the increase of number of new listings. So there it is right there. And then the increase of number of sales. So those two aren't quite catching up with each other, which means that there is just going to start being like an abundance of listings because they're not being picked up as fast as they're being listed.
Hey everybody, welcome back to the Canadian Real Estate Channel. I'm Adam JD Martin, and today we're going to hear from Kayla Smith on Niagara Region. So Kayla, what the hell is going on in Niagara right now?
Hey Adam, same thing kind of that we're hearing everywhere. Everyone's freaking out, the market's crashing. I would say the stats will show otherwise, but a little more opportunity for sure on the buy side, and a little bit of calmness for sellers these days, which I don't think is necessarily a bad thing. So a bit of zen in the world. But yeah, so still busy, still seeing multiple offers on some properties, but we are seeing more people priced a little more appropriately. Not everyone, but a lot of houses not holding offers, which is kind of a nice change of pace, I would think. And even if they are, like, their expectations are a little bit different than what I think they would have been January, February, which means the realtors are doing their jobs, so that's good. But yeah, I can pull up this presentation. Just give me one sec.
Yeah, I'm excited to jump into the stats and see how they look in contrast to some of the other market updates we've done recently, like Toronto and Waterloo.
Yeah, I think they're similar. I did take a quick peek, but so this is basically the Niagara Region, like the Niagara Association of Realtors releases a report every month. This is taken directly from that. I just thought there was like a few interesting things in here. So now 75% of Canadians agreed that their home has become more important to them due to the pandemic. An additional 65% saying they feel a stronger emotional connection to it. So it's kind of changing the way people are buying houses and why they're buying them. And then this one I thought was just a little bit funny, but so increase in remote school work options over the last 2 years. Location seems to have fallen by the wayside when it comes to buyer considerations, proximity to work, school, or other regular commitments. And then the third one is kind of just repetition of what we've been hearing. Like, there's just a massive lack of available supply. Affordability, obviously, also an issue. And 81% from that survey believe that there's a severe supply shortage. And especially among renters, which is interesting. Anytime I post a lease listing, it's like inundated with applications, regardless of what type of house it is, what type of, if it's an apartment versus a house. So it seems to be massive need for rentals as well. And then it just says during the COVID event, people became more knowledgeable of real estate. They became more interested, and they are likely to see purchasing a home as a capital investment. So I just thought that those were interesting points.
Okay, houses are now capital investments. Good, check. The public's up
Yeah.
to speed. One thing from this little market update thing that seems to be, I believe, obvious, but hopefully everybody watching agrees. If you don't, drop a comment. But I think this idea of like location sensitivity decreasing, that looks like a fad to me.
I mean, just from there's people moving back, like more interested in being close to downtown, whether it's renters or buyers. Like, I totally agree with you. I think it just means like if someone lived in, Toronto, now they're working from home, they can now move to Niagara, I'm assuming.
Yeah, it's fascinating to contrast sort of these findings with, like, for example, the Toronto update is that actually there was a bit of a bullwhip effect where people
Absolutely.
left, they leave the downtown in pursuit of, maybe saving the commute, but then all of a sudden the price drops downtown because of that exodus, and then all of a sudden demand is driven again back to downtown, where it is, of course, the more desirable location when we're talking specifically Toronto.
I've
But I
actually
think,
had a few clients that bought away from Toronto, who are in like the condo market in Toronto, they're renting, and they're like, oh, now it's harder to leave because everything's open.
yeah, yeah.
So totally get that as well. So year over year, again, this isn't going to be a surprise to anyone. These look somewhat similar to what they have in the past several months, just with massive increases in prices across the board, like no one was left behind at all. The interesting thing, I guess, is number of new listings. So 1465 in 2021, 1293 in 2022, and then sales 1064 in 2021, 830 in 2022. The difference there is actually not huge if you're looking like comparison. And then average days on market from 16 to 11. I don't love average days on market as an indicator. I think median is better. But I mean, it went down. That was basically the, I guess, telltale there. I think this is probably a better indication. So month over month, again, a pretty drastic increase of listings from Feb 2022 to March. And then not an equal increase in sales. There was still an increase, but it's not quite the same. And then the increase in price, it was there. It's not huge. But I think once we get into April, this will actually, like the number of new listings will look a lot higher because it seemed like the mass uploading of listings happened near kind of mid-March and is continuously happening, which again is just like seasonality of real estate as well. But that's kind of what we saw from Feb to March.
Yeah, interesting to see the a really large increase in inventory, like 30% or something, and then the price is continuing to go up as well.
Yeah, and again, there was no area that's left behind. Some had smaller increases than others, but that's also just what types of houses sold at that time. But it was definitely there, kind of across the board again. So, and some areas saw average days on market actually increase, and some saw drastic decreases, like Niagara on the Lake.
Yeah.
Niagara on the Lake tends to have a lot of luxury homes, which obviously brings up the average days on markets just because they take longer to sell. There's a very limited clientele that can purchase those homes. But yeah, it's across the board, and then some kind of stayed the same. This is just a different way to look at it, but I think it's helpful because it actually gives like the percent change there. So the decrease in number of sales from 2021 to 2022 was 22%. And then up 32.1%. Again, this has been the story for many months. The decrease in average days on market, and then the decrease in number of listings. So you can see kind of the difference between number of sales and number of listings there. And then the month over month, the increase of number of new listings. So there it is right there. And then the increase of number of sales. So those two aren't quite catching up with each other, which means that there is just going to start being like an abundance of listings because they're not being picked up as fast as they're being listed.
Yeah, 100%. That's going to be interesting.
Yeah, and this is a composite home, so they just kind of take an average of all of them. We're still seeing like a lot of action on lower priced homes, obviously, because there's a larger market for them for some home buyers, investors, for some investors. And then the multis, there's been a few multis lately in the Niagara region that have been very well priced. Those tend to not sit just because of what they are, but otherwise we're kind of seeing this across the board. I did want to show this. So this is from Broker Bay. I kind of show a different stat every month. So this is actually showings.
Yeah.
So this is from October 1st. I try to do like the last 6 months-ish. And showings will go down in December regardless because of Christmas and there's less listings, especially this year. But it also tends to follow any big announcement. December 15th went back into whatever stage we were in at that point. Things tend to fall. Then we went back up. Bank of Canada announcement. Stark decline. And I've noticed it when booking showings and like the offers I'm seeing being registered, there was definitely a bit of a lull in showings because I think people don't immediately know how to react to these types of announcements, even though it doesn't make a drastic difference in their affordability or, you know, their pre-approvals are still good. But in this case, I do feel like in the last, and this is anecdotal based on just me booking appointments because there's no stats obviously after this week, but I feel like there's a bit of an uptick. So people are starting to feel comfortable with, you know, the new rates and what's happening. And I would guess that we'll start to see a bit of an uptick in the showings as well.
Yeah, it seems like the media went like full tilt on describing what was going to happen, but
yes,
a lot of people didn't really get the so what portion of that. So like, what does this actually mean for my mortgage and my payment? And I think a lot of people will find out that realistically, this might make a difference of a couple $100, and it's probably not the end of the world. So yeah, I would expect to see your showings go back up.
Yeah, so the like even with like our clients that we're working with, we just recommended like just talk to whoever you're working with for your mortgage. They'll give you the exact picture of what you can do now, and maybe, you know, maybe you're priced out of the initial price range that you were looking in, but also houses are easier to buy now, and they are, what you're going to get in the lower price range is going to be similar than what you were looking at previously. So it didn't cause like this mass hysteria that I think the media maybe portrayed it as. For most people, I would guess. Some people that were on the lower end, like they may have gotten priced out of anything that made sense, but anyone that was above that, I think is in pretty good shape still. And I've actually seen a lot of my clients moving to like house hacking as an option, which has been, I mean, good to see, because then they're, you know, they're buying their first investment property as well. Not any house is an investment, but if you're only paying a portion of your mortgage or none of it, that is obviously a bit of a better one. So months of inventory, everyone, again, like we hit an all-time low. This is December, January. We're only back up to what we were at last year. It's not like we're back here. We're just like, we're still in a pretty good spot. We're still at 1 month of inventory. For the sellers that are freaking out, the only thing you need to do is like readjust your expectations on getting 30 offers and, you know, going $5 billion over asking. But as long as like the realtors are setting those expectations, I think this is still a good position to be in as a seller. And I think it's allowing, again, for more people to enter the market. It may put a bit of a stretch on those people that bought, you know, in the last several months, who now were buying based off their house selling for a certain amount. And that's not the case anymore. So I can see it being stressful for those people, but for anyone that's selling and buying right now, like it's all relative. Despite the fact that you're not going to get that crazy number you may have gotten in January or whatever, you're going to buy and it's going to work out because these things are all equal. So I don't think that there's, you know, much to be concerned about at the moment. I do, like I said, I'm seeing the opportunity with buyers for sure in a better way, but I don't think that it's a bad time to sell your house by any means. There's still low inventory.
Yeah, if you weren't buying super speculatively in the last couple of months, then it seems like fundamentally you should be fine. And like, I'm not sure what the statistic would be on how many people, you know, buy a house and then sell it within a year, but I'm sure it's very few people in the entire market actually attempt to do that.
This was only like the opportunity we saw in the last 2 years where you're going to buy your house in 2019 and sell it in 2022 for double the value. Like that hasn't that's not a thing that happens. So for that to be the expectation going forward is a little unrealistic. So there's that. And then the other thing that I cautioned actually in a video that we did before was just, if you're an investor and you're buying a BRRRR, a flip, this is a time to be cautious in your after renovation value and what you're going to sell for. And echoing what I think everyone has said, like, just make sure you have numerous exit strategies, because you might not get quite what you were hoping to on the flip side or on the BRRRR side. Houses are still selling for a lot, but if you bought a few months ago, which actually we bought a house to flip it, and now we're kind of weighing our options on whether or not that's the best option, given the fact that the market has changed a little bit from when we bought it.
Yeah, and I mean, again, this channel is all about the investors, where a lot of them are investors. And, you know, we always tell everybody, you need to buy things fundamentally based on the investment strategies, which means you have an exit strategy. You can't bank on buying, you know, at a high price and then selling even higher, because that's called gambling, and that's not actually investing. And so you have to have those built-in exits. And
I like when we're working with investors, we always say, like, okay, exit strategy number one, obviously your preferred, let's say it's a BRRRR. Your second, you don't get that appraisal where you want it, you can flip it, or Airbnb. So that was like our initial thought was, okay, we'll flip this. Now we're thinking we might BRRRR it and short-term rental it, or we might duplex it. Like, we have all those options, and that was like a crucial part of buying a property. So I always make sure when working with clients, like, tell me what you're going to do with this property if your initial plan does not work out.
Yeah, that's awesome.
So that's definitely important, especially right now. Okay, so I didn't go through, like, I didn't pull all the listings specifically, but I just wanted to touch on where I've seen some opportunity actually in like the last 2 weeks. For those people that are willing to take on maybe not the most ideal tenants in a multi situation, there have been several. Thorold seems to be the hotspot for some reason, but a few in Welland as well, where there's been triplexes selling for $550, big, like 3 bedrooms and then 2 beds. They're rough, they need some work, but at those prices, like, after you stabilize it, you're gonna have a great return, and there's definitely a BRRRR play there. Just, I mean, nice duplexes sell for $750, so you have to think a triplex, you're gonna be higher than that. So with some time and some work, I feel like those have a ton of potential. So I'm a little bullish for like multis at the moment. And then I've also seen some like maybe little rundown cottages in the Niagara region that have been listed very, very low, which, whether it's a build play or it's basically gutting and rebuilding from the inside, there's just a lot of money to be made on either flipping or BRRRRing, and then the Airbnb play there as well.
And when we're looking at the market, do you have any idea, or might it be captured in this presentation, about like what the list to sales price ratio is looking like right now?
Yeah, so I actually looked at it. I didn't include it just because the chart's a little wonky, but so last month it was 112%.
Okay.
This month it's down to 109.
Yeah, I mean, and I think that's great intel for anybody that's, you know, trying to prepare the best offer, and obviously work with a professional, right? Work with the expert in the market. But if you're just kind of eyeballing the market right now, that's a great thing to just sort of understand, like, hey, we're at 109% roughly on average. So, you know, I'd probably allow for a few percent up or down from there, but
yeah, it's a great like metric to base offers on. And of course, like, we're still having some of those houses that are like, for example, one was listed for $499 in Hamilton, and we had a client that was like, would 550 do it? It sold for $805. But
wow, okay,
yeah, but it's like, it's so wickedly underpriced to start. Yeah. And we just said, like, that's going to sell for, you know, a heck of a lot more. And you can kind of like, our job is to pull and understand those, you know, those situations specifically, and just let the client know, like, this isn't going to go anywhere near.
Yeah, like $499 was not even in the ballpark, right?
No.
So yeah, there needs to be a little bit of thought put towards like, hey, is this reasonably close to what we think it should be?
Yeah. But otherwise, like I said, it seems people are listing a little close to what their expectations are. We're seeing less of like a formal offer presentation date, and maybe more of a, you know, we need 48 hours irrevocable on this offer, meaning they have 48 hours to make a decision. so that possibly other offers can come in, so that everyone gets notified that there's an offer, and maybe they move their showings a bit closer. But we are seeing like less and less of that. And I'm also seeing more listings go for sale and for rent at the same time. And
Oh, interesting.
yeah, so these owners are basically saying, you know, if I can get the number I want for it, that's wonderful, I'll sell it. But if not, renting is a great option. Rents are high, and as long as they cover, you know, their expenses and there's a bit of cash flow there, they seem happy with that. So I've seen quite a few go up, sale, lease at the same time, and it's just kind of, what do we get first, and is it, you know, is it worth taking one or the other?
Yeah, and could you confirm for me? Like, I would just assume there's a relatively low vacancy rate in your city.
Yeah, it's 2.1.
Oh yeah, so like
Yeah.
there's literally, you know, essentially no vacancy. So, you know, guys, if you're listening at home to this right now, you're thinking, oh my God, the sky's falling. Well, it turns out it really isn't. And then also there's great exit strategies or pivots that you have available to you. I mean, in a market where there's 2.1 vacancy, that 2% is owned by the worst units. And so if you have even a decent unit, you're basically at zero vacancy. So
Yeah,
that's a good thing to
anecdotal
understand.
again, but like for our units, because they're like, we always renovate them, or
Yep.
to a certain extent, when we post them, we get like inundated to a point where it's like, I don't do them because
Obnoxious.
it's so overwhelming.
Yeah.
It's just ridiculous, the response that you get. And these are like, they're good rents, they're great tenants. Like, we've never ever had an issue with any of our tenants. And there's just like, there is a really good renter pool here, which I do find is like a number one question I get. It's just like, what do people in Niagara do? Where do they work? How do they make money? I don't know if there's like this perception that like there's no jobs here, but there actually are.
Yeah.
And it makes for a great renter pool too, because of the nature of the jobs. A lot of them are like gig work or service industry. So they're making great money. They're just on paper, it might not be the best. So they really do make fantastic tenants as well. And they want somewhere nice, and they treat it like their home. So I'm a big advocate for, I don't think there's anything wrong with the rental market in Niagara by any means.
Yeah, that's great. And one little technique here too, if you're facing a similar problem like Kayla, where you're getting you're getting run over by interest in your places, key tip from Casey Wong, a big investor that's been on this channel a lot, is to do a ghost post, right? Post to your property at a certain price, see what the interest is. And then if you're getting inundated with interest, keep raising that price. Go up $100, go up $200, go up $300 and see what happens. And if you still have interest at those price points, you might be surprised to find out what you could get for potential rent. And you might use that as a flip strategy too. If you can't get the craziest rent, then sell. And you can use both of those, vice versa. So
we've actually done that, just because, again, this was when I was still handling them, and I think we got 65 messages the first day, and I was like, okay, this is ridiculous. So we actually raised it, and it ended up renting at the price that we raised it at. So that's definitely like a great strategy, and great idea for people that maybe are still renting their own and doing their own property management, but also something to bring to whoever is doing your property management. Like, if we're getting these many messages, then it should be, the onus should be on them to raise the price. So I totally agree with that. That's a great point. Okay, so another question that we get all the time: is there anything happening in Niagara? Are there any businesses there? Is there any money there? So this is all from the NiagaraFallsBusiness.ca in the news. So they do all of the development news, all of the investment news is from that website. I just screenshotted their little headline. So Niagara Falls, they were just featured in a big business magazine. What they're basically talking about is how there's like 12 to 14 million visitors there every year. It is the #1 destination spot in Canada, according to this article. And it's actually a question answer with the mayor. And he speaks to the lack of housing that's available, but also how Niagara Falls is unique, because it's a full city of people that just live there on their day-to-day. But it's also this, destination for travelers, where they go there. There's 12 to 14 million people. They need somewhere to stay. Obviously, you can see the landscape of the hotels for everyone that hasn't been to Niagara Falls, but there's still a need outside of that. So that's basically what that's about. The Niagara region, a hotspot for booming business. So what that's talking about is there's just been a massive influx of big businesses, whether they're from Europe or the States, that are setting up shop here. Because one, the proximity to the States obviously is quite good, but two, there's a lot of space. So for people that need to build big facilities, this is a great spot for that. And they've kind of alleviated some of the, I guess, burdens to investing and building a business here. So that's what that one talks about, which is pretty cool. And then the summer, I've talked about this like ad nauseam just because I'm super excited about it, but they've actually increased the support for the game. So they're doing a few more things to the facilities for volunteers, for workers, for all of those different things. So they have increased the support for that. And that's actually coming up. So it's the beginning of August. And I keep saying like anyone that has an Airbnb during that time is going to do very, very well.
And just 'cause this is news to me. So what is this game? So we're roughly going to attract like a bunch of people to your region?
Yeah, so they're saying there's about 14 to 20,000 people that'll be in the area. And then it should attract over the course of it about 56,000. There's
Nice.
been a bunch of money thrown at it from the feds, the provincial and the region, and they just keep seemingly matching each other. So it's like the Canadian Olympics, if you will. It's all Canadian athletes. So they'll all come here, they'll stay here, they'll train here. There were facilities built or like redone in every city. So that one actually is in Thorold, which I always say this, but it's like there's been nothing in Thorold like this ever. We have Brock, which borders St. Catharines and Thorold, but this is just such like a forward thinking, very edgy facility. It's really cool. So there will be games going on all throughout the Niagara region. So that's what this is for. And then this will actually transition, this specific building will transition to a facility for the city of Thorold, the Niagara region, and Brock University to use together.
Yeah, I mean, it sounds like just actually reading from this resource he posted, Niagara Falls Business. It looks like there's roughly been like $40 million invested into the athletes, and then about, a portion of that is about 30 million for that facility. So this is a significant federal investment, I would call it, in the area. So that's great.
Yeah, and one thing, I used to work for the government. They don't spend that type of money unless they see that return coming back in some sort of way.
Yeah.
So long term, they're seeing, the region growing. And I mean, Thorold only has 22,000 people. So it's not a huge place, but because we're basically we are attached to St. Catharines, but the region is growing and it makes way for these types of facilities. And then the last thing I wanted to talk about. So I thought this was pretty cool. I kind of cheated because this is April news, not March, but nonetheless. So Ontario Power selects Niagara Falls for first large-scale hydrogen production facility. So what they're saying, and if you read the article, it will echo this, is basically they're trying to make Niagara another like green hub in Canada. And allowing, because it has so much space and because of the proximity and the water and all that different stuff, it makes for a really, really good option for these types of businesses. But what this also does is obviously there will be jobs as a result of this for the facility, building the facility, trades, etc. But there will also be a supply chain job reaction as a result of this, being built and whatnot. So
and infrastructure, right?
And yeah, exactly. So it seems like there's a lot of big businesses and a lot of interesting ideas coming to the Niagara region. So I really think that the region is just, on cue to just grow as it has been. And again, all of that room, because it is pretty vast in terms of like empty areas, empty fields, forests, all that stuff. I think that there's just so much room for it to grow that as much as, we're seeing this tiny dive in price and tiny dive in action and more listings, over time, it still makes a heck of a lot of sense to invest in Niagara.
Yeah, particularly if you're seeing opportunities for more density to be built in some of these areas where, we're saying a place has 22,000 people and it's like, well, it's not going to stay like that if it's this close to Toronto, GTA, St. Catharines, these major cities. Like, we see this everywhere, every market in Ontario. If you're near a big city, there's overflow. Immigration's not slowing down. There's so many people coming into Canada, and they need houses, and that's just the facts. And we're pretty slow to build, and so there's this relationship between supply and price that we just can't ignore. So Yeah, this is a fantastic update. It's looking pretty optimistic, really. And I think,
Yeah,
the
when I
sky's
go on
falling.
here, I felt good about it. I was like, look at all the
Yeah,
stuff that's happening despite, maybe all the other negative stuff that's flying around the news. Like, this is all very positive.
yeah, yeah, absolutely. And to me, it doesn't seem like we're going to, like, the stats were fine. They're good.
Yeah.
There's a decent amount of supply. It's nothing crazy. It's like, it's not like things are sitting there forever and not selling. The price is still very strong. Lots of appreciation. And again, I think the only one who's really at any risk at all is the person who bought in the last couple of months and thinks they could speculatively sell for double, because you're just not.
Yeah.
But hopefully anybody who got, half an hour into this video is buying intelligently and using an expert to work with. So
yeah, so that's the presentation. Like I said, I was super it was great while I was making this, because I was like, this is actually super positive, and in like where the investment environment hasn't, like, maybe people are feeling a little bit discouraged or whatever. Like, there's so much good happening here. So if you bought even in the last few months, like, there's going to be an exit strategy for you. It just may not be the one that you initially thought you were going with. So yeah, like I said, it's mostly positive over here in Niagara.
yeah. Yeah, and again, we're always talking about with real estate, right? It's time in the market. You can't speculate. You can't just assume things are going to continue doubling when they are doing that. And so I think anybody purchasing fundamentally, this fundamentally looks like a great market long term, right? And that's how we should always be thinking about real estate. So
totally agree.
that's awesome. Well, thanks for the update today, Kayla. I really appreciate it. I know everybody watching and listening to this appreciate it as well. If you guys haven't already, like and subscribe to the channel so that you guys can continue getting great market updates like this and get out of those quick news cycles that are fear-based and fear-driven. So thanks, everybody.
Awesome. Thanks, Adam.